Stock market trading. Level 1. Round numbers. Round numbers. Have you ever wondered why prices tend to stall at certain levels in the stock or forex market? Is this just a coincidence, or is there a valid reason behind this happening? Well, this phenomenon may actually be explained based on the psychology of stock or forex traders. As humans, we tend to think in terms of whole, round numbers, rather than in terms of uneven random numbers. This happens very regularly in everyday life, where numbers tend to be rounded up or down in order to simplify things. Stock psychological and round levels. For example, if someone asked you the time and you looked at your watch and it was 12:29 p.m, what time would you give the person? Based on the psychology of rounding, many persons are likely to just say 12:30 p.m. rather than 12:29 p.m, since 12:30 p.m. is a rounded number and 12:29 is not. Or what if you wanted to know the price of a meal and saw that it was advertised for $9.99? In your mind, you would probably round it up to $10 instead of $9.99. A similar thing happens in trading when traders conduct technical analysis by examining price charts. Stock trading and round numbers. By default, most traders have a tendency to prefer rounded currency values to odd, random values. Because of this psychology, areas of support and resistance tend to form around certain price levels, since traders subconsciously tend to place stops and take profits at areas where price is rounded. For example, a trader is more likely to place a stop at 1.2500 level than at the 1.2502 level. In forex trading, rounded prices usually are regarded as those prices in which there are double zeros at the end of the price, for example, 1.3400 or 1.5000. Usually, the more zeros at the end of the price, the stronger psychological level and barrier. In addition, short-term intraday traders also view halfway points and price points that are multiples of 100 to be rounded. If you were to study any price chart, you would find that areas of resistance and support usually form at these price levels. Price swings tend to take place at these resistance and support levels. Once the price crosses these invisible barriers, the price changes from being a level of support to being a level of resistance, or from being a level of resistance to a level of support. Traders often use these signals as an indication of what is likely to happen once price approaches these psychological levels. If price tended to stall at these levels when prices were going up, then chances are great that they will stall at the same price, should the price reverse and fall. This chart shows an area of important support turned into an area of resistance once the price breaks below the support level. Round numbers example. Let's walk through a simple example. If someone were to ask you how much you spent on your computer, you would likely respond with an amount rounded to the nearest hundred. Sure, you can give an exact answer, like $639.96, but that doesn't really make any sense. If I had asked the question, I probably don't care about the $39.96. I just wanted a ballpark idea for how much you paid for the computer. Out of simplicity, most people will automatically round to the nearest whole number. This happens in trading too. Traders looking to sell the Australian dollar-US dollar currency pair place a stop at an even $1, not imagining that the price might come into play shortly thereafter. Traders will often call these whole numbers intervals double zeros, as these prices are at an even numbers such as 1.31000 on Euro-US dollar, or 1.57000 on Pound US dollar, or 132.00 on Pound Japanese Yen. This chart will identify the double zeros on the current Euro-US dollar chart. Some traders will even take this a step further by looking at the number directly in the middle of these whole numbers, or the 50s. These intervals, such as 1.31500 on the Euro-US dollar or 131.50 on the Pound Yen, can often come into play in the same manner as the double zeros. One look at any chart will notice that there will often be some element of congestion at these levels as prices move up or down. This chart illustrates Euro-US dollar with double zeros and 50s denoted. Notice that many of the price swings on this chart take place around one of these levels. This is why we want to incorporate these levels into our support and resistance studies. Now let's take a look at the same chart with some of these swings identified. This is why these prices can work so well as support and resistance, because people watch and care about these prices. Not every one of these prices are going to function as support or resistance, but enough do that these levels warrant the trader's attention. Why do psychological levels work? As human beings, we value simplicity. We think in whole numbers, and often, when placing stops or limits, we use these prices. These stops and limits can massively alter order flow and price changes. Let's use the Euro-US dollar as a current example, as prices recently made a large move down around the news and events of the European debt crisis. On this chart, I've marked 3 strong inflections off of the 1.3000 neighborhood. Each time price approached 1.3000, the currency pair bounced back up. This can be explained for a few reasons. Perhaps traders saw the price of 1.3000 and thought that is way too cheap. Or, more likely, as traders were opening short positions, they set profit targets at an even 1.3000. So when that price was hit, they had a pending order to buy to cover. This profit target order to close their position created demand in the market. After the first inflection, traders may not have been extremely bullish on the prospect of pushing price much lower than 1.3000. After all, this price has already been exhibited as support. In many ways, untested psychological levels can be looked at like pivot points, an area where there may be some element of support or resistance, but unfortunately, it is impossible to tell until after the fact. In general, round numbers such as 1.3000 on Euro-US dollar, or 1.0000 on Australian dollar US dollar, or US dollar Canadian dollar, will garner more attention than a more pedestrian level like 1.31000 on Euro-US dollar. So many traders will often assign a higher degree of strength to the more rounded intervals. Where traders can really find value with these levels is when prices may have resisted or been supported there in the past. This tells the trader that others are noticing and acting on those prices, and the potential for the self-fulfilling prophecy of technical analysis may potentially be considered with more strength.